Hey friends, welcome to the Singapore Market Digest for April 24th, 2024. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX. The Singapore market has been showing some interesting movements with several key developments worth noting today. Let's jump right into the companies making headlines. First up, we have City Developments Limited, or CDL, which trades under the ticker CDL on the SGX. CDL is one of Singapore's largest property developers with a diverse portfolio spanning residential, commercial, and hospitality properties. Their shares closed 2.1% or $0.10 higher at $4.84 on Tuesday before a significant announcement was made. What's the news? CDL's wholly owned subsidiary has upped its offer to buy the remaining shares of Millennium Copthorne Hotels New Zealand, MCK, that it doesn't already own. The new offer price is $2.80 per share, which CDL has declared as its final and best offer. This is quite a substantial premium, about 60% above the one-month volume-weighted average share price of $1.75. CDL has made it clear they won't be changing this price again and won't make another offer within the next 9 months if this one falls through. It's essentially a take-it-or-leave-it moment for MCK shareholders. The Independent Directors Committee at MCK is currently assessing this higher offer and plans to provide their recommendation to shareholders by April 28th. This move aligns with CDL's strategy to strengthen its hospitality portfolio, which has been a key focus area for the company. The hospitality sector has been recovering post-pandemic, and this acquisition attempt suggests CDL sees value in consolidating its position in the New Zealand market. Next, let's talk about Keppel Real Estate Investment Trust, which trades under the ticker K71U. Keppel REIT is one of the largest REITs in Singapore with a portfolio primarily focused on premium commercial properties in key business districts across Singapore, Australia, and South Korea. Keppel REIT's manager just released their Q1 2025 results, and there's some good news on the property income front. Their net property income grew by 13.3% year-on-year to $54.6 million in the first quarter. This impressive growth was driven by several factors: better performance from their Singapore properties in the central business district, increased occupancy at 2 Blue Street, and contributions from their 255 George Street property. However, it's not all rosy news. The REIT's distributable income, which includes an anniversary distribution, actually fell by 3.2% year-on-year to $54.4 million. This mixed result paints an interesting picture of Keppel REIT's current position. While their properties are performing well with higher occupancy and better rental income, there are other factors affecting the bottom line, distributable to unit holders. Keppel REIT units closed 0.050 or 0.6% higher at $0.83 on Tuesday, showing a modest positive market reaction before these results were announced. Finally, we have some significant news about Paragon REIT, which trades under the ticker C2PU. Paragon REIT owns prime retail and medical suite properties in Singapore, with its flagship being the Paragon Shopping Mall on Orchard Road. The big news here is that Paragon REIT is set to be taken private. Unit holders have approved the scheme resolution proposed by Cascade & Peaks Times Properties for privatization. This is a major development that will see Paragon REIT delisted from the SGX, with the expected delisting date being June 6th, subject to regulatory approval. During the scheme meeting held on Tuesday, there was strong support for the privatization, with about 82.8% of those present and voting agreeing to the offer. This represented approximately 97.6% of units. The scheme resolution was also contingent on approving amendments to the Paragon Trust Deed, which also passed. For investors holding Paragon REIT units, here's what you need to know. The last day of trading is expected to be around May 14th, followed by the record date on May 23rd at 5 p.m. Unit holders will receive the scheme consideration of $0.98 per unit in cash on or around June 4th. Paragon REIT called for a trading halt on Tuesday morning and requested to lift it on Wednesday morning. The counter last closed on Monday at $0.97, which was 0.5% or $0.2 lower than the previous close. With the privatization offer at $0.98, This represents a small premium to the last traded price. This privatization reflects the ongoing trend we've been seeing in Singapore's REIT market, where some trusts are being taken private amid challenging market conditions and potentially undervalued unit prices. For Paragon REIT unit holders, this marks the end of an era as a publicly traded entity. Looking at these three developments together, we're seeing different strategies at play in Singapore's property and REIT sectors. CDL is looking to expand its hospitality holdings. Keppel REIT is showing property performance improvements despite distribution challenges, and Paragon REIT is exiting the public market altogether. These moves reflect the diverse approaches companies are taking to navigate the current economic environment. Property developers like CDL are selectively expanding in areas they see value, while in the REIT space, we're seeing both operational improvements and strategic corporate actions like privatizations. That's the scoop for today. Remember to do your own research before making any investment decisions. This is Iggy from the Investing Iguana, signing off.